All right, we're just about ready to get started here. All right, I want to thank you for joining us on our live webinar. All you real estate agents, are your clients waiting for lower interest rates? You are about to learn the exact strategies to close more deals by attaining an effective interest rate below 4% in 24 hours or less. I want to show you some of my previous clients that I have used this specific strategy. $10,000 in GCI within 3 months. This couple were looking for a home, but they had a lease that didn't expire for 6 months. I demonstrated the strategy. Their father was a former MLO for another lender. He was completely amazed and said the math is correct and the strategy is great. We closed, and they actually referred their sister and a couple of other friends to use the same type of lending strategy. And what was really funny was that the listing agent, when I presented the offer, was asking me, what is this product that's on the conventional financing addendum? And I proceeded to tell her. She then called our lender, and she called me back and she said, in my experience for the past 25 years, I have never seen anything like this, nor has an agent ever brought this up. We're actually very excited about it. And in fact, my seller, who is moving to Florida, is going to use the exact same lender for herself. So very powerful. Actually, my client's effective interest rate based on their financials was 2.654. Just want to show you the Alta. This is a quick screenshot of the commission that was earned, 10,150. This next client was a Zillow lead. First time I met him, he already had an agent, was not even remotely interested in buying, just wanted to shop around because he already has a house. But where he works is kind of far for a commute, so he was looking for something closer. But again, he was thinking of 2024 when interest rates were lower. He ended up buying the first house that I showed him because I told him that if I can show you a strategy that can get you a rate, effective rate below 4%, would you be interested? And he said, absolutely. I gave him a presentation. We went on Zoom. I calculated all his numbers. We closed in November. And not only did I make $24,000, I got to also list his home. He referred me to two buyers, and he wants me to be a guest speaker at his congregation. His effective interest rate, 1.33. I'll be saving him over $1.1 million in total interest. Here's a screenshot of his Alta that had settled. Again, $24,375. My client was kind enough to do a video testimony sharing his experience and his story. I put that here. Third buyer, again, a cold rental lead. Couple was divorced. She needed to find a place ASAP to put her kids in the same school district. When I showed her the rental, she said she's going to buy a house in a year. I went over the strategy so that she would be prepped for a year from now. Again, very impressed by the level of expertise that she asked me to list her house, which is now under contract. Here is an existing client 3 years ago. He had 4%, 30-year fixed. I redid his analysis using the new strategy. And as a result, he's going to save $143,000 in interest and have his house paid off in 6.3 years. So he was happy. He also referred me to his neighbor who is moving to buy a $900,000 single family. And the final example, this gentleman here is actually one of my tennis friends. He belongs to a USTA league that I participate in. And we just kind of had a casual conversation because he said that he wanted to build a tennis court in his backyard, but he didn't have enough land, so he needs to look at another house. Consequently, I decided to share with him the program, and he got very excited about it. And now we are going to list his house. his $900,000 house, and he's looking to purchase 1.5 million. So a quick summary of just a couple of those deals as examples that I've done. In 3 months, 46,000 in GCI, approximately what I have in contracts and listings, 93,000. I've also contacted a lot of my old clients, gave them some presentations. About 15 of them are now actively looking at investment properties, which is a good thing, even though, the inventory is scarce. But, if they see something, we're definitely going to buy. They're not afraid. And I have 25 online buyers from my marketing sources, Zillow, Realtor.com, that are ready to buy now. And so, yeah, very excited about how this has been working out for me. So in my research and talking with other agents, new construction builders, lenders, it seems as though 99% of the people out there do not know this strategy. Are you going to be the 1% with me that learns this? You don't have to do it, but you do get to do this. So here's what we're going to learn today. A simple and easy to use strategy to overcome the main objection. I want to wait until interest rates come down. You're going to learn how to close more deals and win clients by offering this unique solution that no one else has. You're going to be able to close deals on autopilot without investing a dime in paid lead services. You're going to get endless referrals because you have something unique and valuable that they're going to want to share with the people they know. This solution is going to allow you to get an effective interest rate below 4%, saving your clients up to 70% in total interest paid. Not only are you their real estate agent, you are going to be that person that changed their lives and makes a difference. A great reason to stay in touch with your clients versus birthdays and holidays, reminder cards. The reason why I say that is because this strategy gives me the reason to call my clients every quarter and see how they're doing. And then I rerun it and I can tell them if they're ahead of schedule or behind. And now I'm really offering some guidance, and I care about where they are in their home process in terms of paying off their mortgage and saving money. And at the same time, it gives me an opportunity to ask if they know anybody else that might be interested. So again, I think it's a great reason to stay in touch versus the normal things that real estate agents do. Here's the truth. 86 million families have 30-year mortgages. The average person moves 11.7 times, according to the U.S. Census Bureau. People have a tendency to focus on interest rates and not the balance or the amount of time. And people are more in debt today based on the financial instruments that we have. You might be thinking, how do I present this to my clients? Well, not to worry, all this is factual and mathematically proven. In addition, I will provide you with examples on how to present, and the banks will be able to back you up. You don't need to be an expert, you just need to be the messenger. So not only are you going to show your clients how to get a low effective interest rate below 4%, but the bonus is that you're going to be able to show your clients how to pay off their home loan in less than 10 years without having to make extra principal payments, changing their lifestyle or income. It won't hurt their credit. And this will be a game-changing event in people's lives. Allow me to introduce myself. My name is Sean Durr. I have 15 plus years in the real estate industry, 15 plus years in the financial services industry. I used to be a former registered investment advisor and CFO of 2 tech companies. I am also a real estate investor. All the information that I'm going to share with you has been verified by financial institutions and also by my CPA. As you know, a lot of CPAs and financial advisors are not even aware of this type of strategy. So I actually presented it to my CPA, and he verified that, again, the math is correct and that the strategy does work. And he was very kind to write me a letter of verification. So here are the 4 steps. Step number 1, you're going to learn to understand the concealed traps and pitfalls of a 30-year mortgage and changing your mindset. We're going to compare the way interest rates are calculated in different types of loans. Step two, we're going to learn the financial engineering strategy to lower the effective rate. We're going to implement specifically the money movement concept, which is a conceptual framework based on macroeconomics and factoring the time value of money. You're going to have the ability to have access to our custom financial comparison calculator, so you can run a variety of scenarios for your clients. And I provide simple language and examples so that you can educate your clients as well. Step three, you're going to qualify your clients and introduce the strategy and products to our list of reputable FDIC banks and financial institutions. And step four, because of all this, you're going to be able to position yourself as the unique authority and leader in your market. Step one, understanding the concealed traps and pitfalls of a 30-year mortgage and changing your mindset. So what happens to our clients every 5 to 7 years? Well, the first trap is moving. The second one is the refinancing trap. And what's the consequence? Well, if you understand how the 30-year mortgage works, because of the fact it's all front-loaded interest, if they're moving and refinancing every 5 to 7 years, they are restarting that vicious 30-year cycle. Kind of like that movie in Groundhog Day where he woke up every day at the same time and his day kept starting all over. It's the same thing here. If you keep moving and you keep refinancing, you're repeating that cycle. You probably already know the truth about how your principal portion of the payment is calculated based on the 30-year amortization schedule. It's on average of 3% a year, or 0.25% of principal accumulated each month. So you're never really accumulating a significant amount of equity until the last 10 years. In some ways, your consequence is that the bank is essentially your landlord. So you do not want to let your clients pay 2x for the price of their home. So I ran a quick amortization just for a 7-year period based on a 30-year mortgage at $360,000, 7.5%. You can just see on this right side that the principal accumulated is $29,000, and you would still owe $330,000. No tricks here. In the same example, this $400,000 house with a $360,000 mortgage, over a 30-year period, they're paying $546,000 in interest, grand total $906,000. Cost of money is 1.36. You might be saying, well, they're not going to probably stay in that home for 30 years. But I'll make the argument that they're going to probably stay in some kind of home with some kind of mortgage for 30 years. So whatever the case may be, they're going to be paying a lot of interest. And maybe this is why people don't want to buy or sell right now. So what are the common typical solutions that are out there right now? 2-for-1 buy down. It requires money to do that. It's kind of just a short-term fix. Doesn't really address the front-loaded interest issue that occurs in a 30-year mortgage. You can also have your clients pay a higher down payment. That's always great. But the problem is majority of buyers cannot put down more than 20%. And then finally, I guess if some people have to deal with it because they have to buy something, so they deal with it, refinance later, it's going to cost them money, restart that 30-year cycle again when they refinance. Plus, as we know, when you refinance, you have to redo the appraisal. You have to make sure your income is good. Credit score has to be high enough, and make sure your DTI is below a certain percentage. Step two, the financial engineering strategy using the money movement concept. Again, we're looking at it from a macroeconomic framework, which is basically big picture, opposite of microeconomics. We're going to use daily interest calculated loans using sweep accounts. And doing so, we're going to be able to save our clients up to 70% in total interest paid, therefore lowering their effective interest rate. So how does this mathematically work, and how does it really beat the system? Well, the power of money movement strategically keeps funds in continual circulation to maximize financial gain. Kind of like if you were to think of an example of what the banks and financial institutions do with our money. When we put our money in a savings account, a CD or whatnot, it sits there. Our money remains stagnant. But the bank is not letting that money just sit there. They're reinvesting it. They're borrowing and reinvesting in other things. Corporations do the same thing. They leverage to expand their business. So when money keeps moving in flow, the economy grows and more wealth is generated. However, from a consumer standpoint, we're not taught to do that. We're taught to put money in one place and just have it do one thing. Whereas the corporations and the financial institutions make their dollar do more than one things. The course is going to talk about sweep banking and the effects of it. Sweep banking is basically allowing you to adopt the money movement concept. And because of it, it's going to lower the effective interest rate, save money on interest up to 70%. It will accelerate the loan payoff period. Because it's a sweep account, you have complete access to funds. So money is reusable. And that's what we're talking about, being able to reuse your same dollar in multiple things, as opposed to keeping it stagnant. For you as the agent, you're going to be able to close more deals, generate referrals, and awaken your client database. Go back to your old clients, run the scenarios for them. They might want to buy investment properties. They might think about moving again, maybe a second home. But yeah, definitely you want to call your clientele. So this is one of my most common examples that I use when I talk to clients. I base it off a $400,000 home using 10% down, assuming a $10,000 a month income, $4,000 a month in household expenses, not including the mortgage payment. And when I enter it into the system, it's going to spit out 6.7 years to pay off the loan. They're going to save $426,000 versus the 30-year based on today's rates. So when you think about it, in that 30-year, you're spending $546,000 in total interest versus $119,000. That is a big difference. So you can probably imagine how your clients are going to feel when you're showing them a way to save over $400,000. I mean, that's another home. When you finish the course and your mindset has changed, you're going to find out that interest rates are not the enemy. Time and balance is the enemy. So just to bring up some simple math, a lot of people don't realize this, but you can mathematically calculate it. A 3% loan over 30 years costs more than a 9% over 9. Just look at this example. 30 years at 3%, $232,000 in interest paid versus 8.3 years, $189,000 in interest paid, a savings of $43,000. So I bring this topic up as well. What are the traditional methods to accelerate a mortgage? These are two very common traditional methods that really don't work. Paying extra principal. Why? Well, you have to have discipline, you have to have consistency, and you really need to remember to do it. You know, there's always reasons why we say we're going to do things, but it never gets done. So trying to write that extra payment and telling your bank to apply it towards principal, during our busy lives, we're not going to remember to do it every single day or every single month or whatever you were planning on doing it. And in addition to that, every time you make a deposit to pay down that mortgage, since the 30-year mortgage is close-ended, you have no access. So if you happen to have $50,000 extra on the side, you're not gonna want to give that to your mortgage company to pay down the balance unless you know 100% you don't need that $50,000. So, you know, you might give 10,000 because you might say, I want to keep 40 on the side for emergency. Second, biweekly mortgage. Very common practice, but it really only shaves the mortgage by 10 to 12 years. So it really doesn't address the first 10 years of front-loaded interest. One of the most common questions I get asked every time I show this presentation is, why is the general public unaware of this? It took me some time to think about it too, because, you know, I've been around the industry for quite a long time. And, you know, it was only probably in the past 3 to 5 years that I actually discovered this and really put it to use. And I came up with the conclusion that, you know, when it comes to lenders, people shop them. So when lenders are talking with buyers, they got to compete with what the rate is, what the costs are. So they do not have the time, nor they probably don't even have the knowledge and education to explain this particular strategy because they're busy trying to compete against their peers. Buyers are infatuated with interest rates. You know, we're very proud if you're probably very proud if you have 2.5% 30-year, and you're probably hating it if, you know, if you're trying to buy a house now because of the fact that interest rates are higher. You know, the other truth of the matter is that people don't even monitor their mortgage balances. You probably don't even know what your mortgage balance is. The only time you ever know is when you're doing a refinance and your lender tells you, or when it comes time to sell your house and you need a payoff. Another reason is that the banks make less money, right? If they're making less interest, they make less money. So they're not going to advertise it. CPAs and financial advisors, although they would understand this, they don't play a role in helping people buy a house. This is not taught in school. And because of the fact that we're all trained to buy a house a certain way, we just follow the crowd. Step 3, we're going to qualify our clients. You're going to input your client's basic financial information using the custom financial comparison calculator to determine the level of benefit. Once you've established that, you're going to implement the strategy using the FDIC banks and reputable financial institutions that have the products. And if you're working with clients like I am, which I'm sure a lot of you, in fact, I'm sure a lot of us share the same type of clientele. And on average, I'm seeing anywhere between 2 to 3% effective interest rate. So a couple of bullet points here. FYI, clients who can qualify for a conventional loan would typically qualify for this program. As you probably know, but probably never thought about it, with mortgages, you still can go into foreclosure no matter how much equity you accumulated. You could be in your 26th year and lose your job. And then if you end up missing 3 payments or 4 payments, you're going to be in a pre-foreclosure situation and your credit will get damaged. So now not only is your credit damaged and you can't get access to all that equity, it's not like you can call the bank and say, hey, can you just add the 3 or 4 months of payments that I miss onto my mortgage balance? No, it doesn't work that way. You got to figure something out, and it's going to be costly. With this program, you're never going to need to refinance again. It works for existing mortgages as well, even when they are at a much lower rate. And step 4, upon completion of the course, you're going to position yourself and become the authority and leader in your area, and you can scale and repeat. And you're going to not lose clients due to high interest rates. So just ask yourself a simple question. What would your clients say if you could offer them a lower effective rate, saving them hundreds of thousands of dollars in interest while having the ability to have their mortgage paid off faster without making extra payments, changing their lifestyle or income, using a system that is automated that requires no extra work? How to get started? So option 1, you could do this yourself, but it's not going to be easy because, the first thing is, in order to have a solution, you have to know the problem. And let's be honest here. Some of you have been in the business for 5, 10, 15, 20, maybe even 30 years. If you didn't know it now, chances are you're not going to ever hear it again. At the same time, you're not going to have the strategy or the list of banks and institutions, because again, this is not something that every bank and every mortgage company has. You need to know how to present it properly and easily to your clients. Overcoming objections and questions for them. You're going to need to have a financial tool to be able to calculate the different scenarios. And without that, it's going to be very difficult to do it on spreadsheets by hand. And the consequences of doing it yourself and being delayed is that it's the cost of closing deals now, and also costing your clients for not doing it now that you've actually been introduced. You want to be one of the first to do this, because as other agents become aware, the secret's going to get out and this won't last. Your time is valuable. And for all you quick learners, you can master this in less than 24 hours. I've developed the online course. We provide weekly coaching. We have the financial calculator, the list of banks, and we're going to have a private community so that we can share results with each other. And you can choose option 2 and work with us. With that, you'll be able to learn the strategy in less than 24 hours. You'll have access to the custom calculator tool. We're going to have group coaching to answer all questions. You'll get the access to the list of banks and financial institutions that have the products. You're going to get the scripts to be able to present, answer questions, and overcome objections. The cost of this is less than 10% of one deal. You might be wondering, well, what happens if I don't have a financial background? Can I do this? Absolutely. All these concepts and products are common knowledge and available. It's just not advertised or put together in a strategic framework. Are there plenty of institutions that have this product? Well, the answer is yes. Many brokerages have this product, but the MLOs don't even know they have it. And they're not even educated on the strategy to explain it. So that is why you need to be the objective voice to provide the information to help your clients save money. I had the opportunity to interview one of the senior VPs for the lender that actually has the product. It was great because I got to ask a whole bunch of questions. He explained the entire program to me. And what was really funny was that he said in his 25 years of business, I am the only agent in the area that he has ever seen that understand and was so passionate about this program. He told me that the type of clients that he got that actually used this program were only the type of clients that were accompanied with a CPA or financial advisor that seeked it out. Because like I said, again, typical real estate agents and lenders do not pitch this product. I'm going to give you the exact roadmap and the key to success so that you can have the same experience as I have. So the price of the course is less than 10% of one deal. For those of you that are probably part of a team, your commission splits are more expensive than this. You're going to gain so much information and knowledge, and you're going to save your clients a ton of money. Your future self will thank you. And with that price, you're going to get a couple of bonuses included. First, you'll be having access to weekly coaching. That VIP access will be a private group that will give you 24/7 support. Second, you're going to have access to the financial calculator comparison tool. Number 3, you'll get complete access to our bank list. As we get more banks that come on board, the course will be updated, so you'll have access to all the new information. And finally, you're going to become part of a private community where we can share experiences and ask questions amongst each other. When you begin this course, I really encourage you to start this. Contact your immediate buyers, contact your sellers that are on the fence, reactivate your database, and send examples of the strategy to all of them. Attend events and speak about it. Contact your online leads, even if they have an agent. Share the expertise. We're getting such a high demand on this course, and I am only one person. At some point, we're going to have to raise the price, bring on more staff and coaching. At the same time, don't be the last one to learn the system, as it does apply in all real estate markets. You really can be the best that you can be. This really hit me as I started to do it more often, because, I was really excited how I was closing deals faster. Because, as a real estate agent, we handle real estate transactions as part of our professional career. But, today we can be that person that makes a difference with our clients. You can be that person that saves your client an enormous amount of money getting the house of their dreams. You can be that person that helps families fund their children's college education. And you can be that person that accelerates and funds your client's retirement. Be passionate about what you do and what you can offer, and let's grow this real estate industry together. And we provide a satisfaction guarantee. If you did not find this information valuable, and if you cannot close more deals and do not have the clients that can qualify, just let us know. So click and enroll today, and let's get started. I look forward to working with every one of you, and I want to thank you for taking the time to listen to this presentation. Take care.